Hi everyone and welcome to Accounting Buddy PH and welcome to the very first video presentation of this newly created channel made with love just for you guys. And since this is the first video presentation, we're going to start this with a very quick introduction of accounting. Usually when we Hey guys, so today we're going to discuss another step in the accounting cycle. So we're done with the journalizing, we're done with the posting, we're done with the trial balance. So now it's time for the adjusting entries to rack on. So the adjusting entries or the end of the period adjustments is the fourth step of the accounting cycle. So this is one of the toughest topic in the basic accounting or in the fundamentals of accounting. So I highly suggest that you take down notes while watching this video. And I know that it would be hard for you guys to grasp everything in just one setting. So I also suggest that you guys have to watch again this discussion video. Well, only if you feel like you need to. Pero kung tingin mo naman okay na, tingin mo na gets mo na, so there's no need to watch again, okay? So on that note, we're going to start our discussion proper on the end of the period adjustments. I hope you guys still remember the 5 basic accounting assumptions. So one of them is the time period assumption. So under this assumption, the life of the business is divided into equal periods wherein at the end of each accounting period, the financial statements are prepared. So this end of each accounting period is called by the accountants as cut-off period or cut-off date. So in an accounting period of 1 month, so the last date of the month is the cut-off period. So for example, in an accounting period of 1 month, so the cutoff period or the cutoff date would be the last date of the month. So say for example, for the month of March, so the cutoff period or cutoff date would be March 31. So hindi pwedeng March 27, March 28, 29, or 30. It should be March 31. So the date that will appear in the financial statements or even in the trial balance should be March 31. So hindi pwedeng March 28, hindi pwedeng March 29 o kaya March 30. It should be March 31 kasi yung last day ng March is 31. So if the cut-off date of the 1-month accounting period is March 31, so that would mean that only those transactions that happened until March 31 are going to be included in the preparation of financial statements for the month of March. So those transactions that happen after March 31, like April 1, April 2, or whatever date, so hindi siya pwedeng isama sa financial statements ng March. And then, if the accounting period is 1 year and the business is using the calendar year, so the cut-off period or the cut-off date would be the last day of December, and that would be December 31. So, see, it's very important that you guys know what is the last day of each month. So, you should know how many days in a month, how many days in January and February and March and so on and so forth. And I'm going to share you a trick in order to remember all these things without even memorizing it. I'm showing you guys a fist. So as you can see, our fist has finger joints or knuckles. So those months na tatapat sa knuckles or finger joints are those months that have 31 days. And then as you can see, in between the finger joints or in between the knuckles, we have this kind of space. So those months na tatapat sa space in between knuckles or in between the finger joints are those months that have 30 days. Well, except for February, kasi in February, it's either 28 or 29, depende kung leap year siya or hindi. And then we're going to start labeling our fist from our index finger joint, moving to the left or small finger. So as our index finger joint is a starting point, so this means this is also the first month of the year, which is January. And since natapat nga siya sa finger joint, so that means that January has 31 days. So next is February. So yung February is natapat sa space in between knuckles or in between finger joints. So generally speaking, those months na tatapat sa space in between knuckles are those months that have 30 days. Pero nga, exception to the rule is the February. Kasi yung February would never have 30 days. Nasa 28 or 29 lang siya, okay? And then next is for the month of March. And since natapat siya sa my joint, so that means March has 31 days. Next to March is April. And since natapat siya sa my space, so that means April has 30 days. Next is for the month of May. And since nasa joint, so that means May has 31 days. Next is for the month of June. So nasa space siya, so that means June has 30 days. And then July. So nasa joint siya ng small finger. So that means July has 31 days. And then we're going to go back to our index finger joint. So next to July is August. So since nasa joint siya, so that means August has 31 days. And then next to August is September. And then nasa space siya, so that means September has 30 days. For the month of October, so nasa joint siya, so that means October has 31 days. Next to October is November. So nasa space siya, so that means November has 30 days. And then for December, so nasa joint siya, so that means December has 31 days. So let's go back to adjusting entries. So what are they? What are adjusting entries? The adjusting entries are journal entries which are to be recorded in the general journal. So these adjusting entries are prepared at the end of the accounting period following the preparation of the trial balance. So again, the adjusting entries are prepared at the end of the accounting period. That's why they are also called as end of the period adjustments. The primary objective of preparing adjusting entries is to present a correct financial statements, and that would mean bringing the records or balances of accounts updated and properly matching the revenues and expenses during the accounting period. And here are the types of adjusting entries. So we have first the accrual. So it is consists of the accrued income and accrued expenses. Then we also have deferrals, pre-collection of income and prepayment of expenses. And then 3, we have provision for estimated and collectible accounts. And then 4, provision for depreciation of property and equipment. And then 5, adjustment on merchandise inventory. 6, correction of erroneous journal entries. And 7, adjustment for change in market value of investment in trading securities and investment in available for sale securities. So we will be discussing them one by one except for the number 7. So this number 7, reserve na lang natin to for the higher accounting. Again, the accruals has 2 kinds, the accrued income and accrued expenses. When we say accrued income, it means or it refers to the income that is already earned but not yet collected when the accounting period ends. So say for example, a building owned by Metro Davao Hotel was partly rented by Allied Banking Corporation for 50,000 pesos per month, payable every 5th day of the following month. So the rental of the month of December 2018 should be paid or will be paid on the 5th day of January 2019. So in this illustration, the building owner, which is Metro Davao Hotel, meron na siyang income from rent by December 31, 2018, which is 50,000. Kaya lang, hindi pa niya makolect kasi nga yung agreed payment date nila is on the 5th day of the following month, which in this case is January 5, 2019. So this is an example of an accrued income. An income that is already earned but not yet collected. And this is something that must be recognized or that must be recorded in the general journal. So we need to prepare an adjusting entry for this in order to record the income earned and in order to recognize the corresponding asset account, which in this case is the receivable. So therefore, on December 31, 2018, Metro Davao Hotel should record income from rent of 50,000 pesos, although such amount was not yet received. And this will be the adjusting entry of Metro Davao Hotel on December 31, 2018. So debit accrued rent income, 50,000. So accrued rent income is also similar to rent receivable. So that means that you can also use rent receivable instead of accrued rent income. And then credit is rent income, which is also 50,000. So this is the record rent income that was earned. Let us now move on to the other type of accrual, and that is the accrued expense. So accrued expense is an expense that is already incurred but not yet paid when the accounting period ends. So for example, so we're using the same illustration actually, but this time we are going to analyze it at the viewpoint of Allied Banking Corporation. So si Allied Banking Corporation, ito yung nagre-rent sa building ni Metro Davao Hotel. So, etong si Allied Banking Corporation, meron siyang bayarin every month kay Metro Davao Hotel, which is 50,000 pesos para sa kanyang rent. And then, yung agreement nila is that yung bayarin sa rent ni Allied Banking Corporation for a month ay babayaran niya yun on the 5th day of the following month. So, yung rent ni Allied Banking Corporation for the month of December 2018, babayaran niya yon on January 5, 2019. So, this is an example of an accrued expense, an expense that is already incurred but not yet paid when the accounting period ends. So, here in this illustration, the rent is already incurred in December 2018, but then it is not yet paid because the agreed payment date is on January 5, 2019. And take note that the accounting period ends on December 2018. So, therefore, we have to prepare an adjusting entry in order to record the expenses incurred, which in this case is a rent expense, and recognize the corresponding liability account or the payable. And so, the Allied Banking Corporation should prepare this adjusting entry on December 31, 2018. So, debit rent expense, 50,000, and then credit to accrued rent expense, 50,000. So, this accrued rent expense is similar to rent payable. So therefore, you can also use rent payable instead of accrued rent expense. So this is to record the rent expense that was incurred. Financial statements presentation. The accrued rent income or rent receivable being a current asset account, it is to be presented in the balance sheet. While the rent income as an income account, it is to be presented in the income statement. On the other hand, the rent expense as an expense account, it is to be presented in the income statement, while the accrued rent expense or the rent payable as a current liability account, it is to be presented in the balance sheet. So what will happen if we don't prepare an adjusting entry at the end of the accounting period? So for the balance sheet, failure to record accrued rent income or rent receivable will understate the assets in the balance sheet. This actually refers to the adjusting entry we made in the book of Metro Davao Hotel on December 31, 2018. Our debit entry, accrued rent income or rent receivable of 50,000. So this is an asset. So kung hindi tayo gumawa ng adjusting entry on December 2018, etong 50,000 pesos na accrued rent income or rent receivable, hindi ito ay maisali sa assets ni Metro Davao Hotel on December 2018. So, in short, if hindi tayo gumawa ng adjusting entry wherein accrued rent income or rent receivable is debited, so yung assets ni Metro Davao Hotel on December 2018 is kulang or understated. For the income statement, so if we did not prepare the adjusting entry wherein rent income of 50,000 is credited, the total income in the income statement is understated, and as a consequence, a profit will also be understated. And if profit is understated, that would mean that the owner's equity is also understated. So this one still refers to our adjusting entry in the book of Metro Davao Hotel on December 31, 2018. This is the basic structure of the income statement. Income less expenses is equals to profit. So what will happen if we did not prepare the adjusting entry wherein the rent income of 50,000 pesos must be credited? Kung hindi tayo gumawa ng adjusting entry, etong rent income na 50,000 pesos, hindi ito maisama or maisali sa ibang income ng Metro Davao Hotel. So, yung income ni Metro Davao Hotel on December 2018 is understated or kulang kasi hindi na isali yung 50,000 na income from rent. And if the income is understated, so it follows na yung profit then is also understated. Remember that profit is one of the components of the owner's equity. In fact, it's an addition to the owner's equity beginning balance. So if the profit is understated or kulang, so if you're going to add it up in the owner's equity beginning balance, so it would result to understated owner's equity end. Let us now proceed to the book of Allied Banking Corporation. If we did not prepare the adjusting entry on December 31, 2018, the total expenses in the income statement of Allied Banking Corporation is understated. And as a consequence, profit will be overstated. And then if profit is overstated, the owner's equity is also overstated. Again, this is the basic structure of the income statement. Income less expenses is equals to profit. Kung hindi tayo nag-prepare ng adjusting entry on December 31, 2018, etong rent expense of 50,000 pesos, hindi ito kasama sa magiging expenses ni Allied Banking Corporation. So, mas maliit yung magiging deduction kasi nga hindi kasama yung rent expense. And since mas maliit or understated yung deduction from the income, so in effect, mas malaki or overstated yung magiging profit. And as I mentioned earlier, profit is one of the components of the owner's equity. So kung sobra yung profit or overstated yung profit, and then we're going to add it up in the owner's equity balance. So therefore, yung owner's equity end is also overstated. And then for the balance sheet, kung hindi tayo gumawa na adjusting journal entry on December 31, 2018, so hindi natin ma-recognize or ma-record ang accrued rent expense or rent payable. And as a result, kulang or understated yung liability sa balance sheet ni Allied Banking Corporation.